A company worth nearly $5 trillion has found a remarkable way to grow. It gives money to its own customers, so they can buy its products. Wall Street has a polite name for this: circular financing. You may know it by an older, less polite name. Open the file. This July, Bloomberg reported that Nvidia is backing roughly $750 billion worth of deals across the AI industry. Money flowing to OpenAI, to cloud companies, to chip buyers in Asia. An empire of handshakes, and almost every hand it shakes belongs to a customer. Follow $1 around the loop. Nvidia commits money to an AI company. The AI company uses that money, plus billions borrowed against the hype, to build data centers. The data centers are filled with Nvidia chips. So Nvidia's own money comes back through the front door, recorded as revenue. The revenue makes Nvidia look unstoppable. The stock rises, and the loop begins again, bigger. And it's not one loop. Microsoft invests in OpenAI, which rents Microsoft's cloud. Nvidia backs OpenAI, which buys Nvidia chips. Chipmakers invest in customers who buy chips. Bloomberg literally published a diagram of who pays whom. And it isn't a chain. It's a circle. When the biggest companies on Earth are each other's investors, suppliers, and customers, one question becomes very hard to answer: whose money is real? Now open the old files, because this exact machine has been built before. In the late 1990s, telecom equipment makers lent billions to their own customers so those customers could buy their equipment. It was called vendor financing. The revenue looked spectacular, right up until the customers, who were spending borrowed money, ran out of it. When the dot-com bubble burst, the equipment makers discovered their best customers had been an illusion funded by their own balance sheets. Lucent, once America's most widely held stock, never recovered. Nortel is gone. The lesson of that file: revenue you finance yourself isn't demand. It's a mirror, and mirrors shatter. Here's what makes this file current. The week those $750 billion in deals hit the news, the Nasdaq 100 slid into correction territory, down more than 10% from its June peak. For 2 years, Nvidia headlines mostly made stocks go up. This one landed in the middle of a sell-off and made it worse. That flinch is the sound of a market quietly asking the question in this file: how much of the AI boom is customers spending their own money? And how much is one company's money, wearing 100 different jackets? Let's be precise, because precision matters. None of this is fraud. Every deal is disclosed, lawyered, and public. Enron hit its loops. This loop is on the front page. But legal and safe are different words. The telecom vendors weren't criminals either, and their shareholders lost everything just the same. A circle doesn't need a villain to be a trap. So what do you do with this file? One habit: whenever a boom looks unstoppable, trace where new money enters the circle. Real booms are fed from outside, customers with profits, spending them. Fragile booms are fed from inside, the same dollars lapping the track, counted as new each time they pass. The moment outside money stops arriving, the circle isn't a machine anymore. It's musical chairs. This case doesn't close tonight. The loop is still spinning, and nobody rings a bell at the top. We'll keep this file on the desk and reopen it when the music changes. If tracking the circle was worth your time, a like tells us to keep watching it. Subscribe, because when this loop wobbles, you'll want to be holding the file, not the bag. On the Money Files. File open.